Hey everyone, welcome back to Corporate Decoder, the place where we decode the jargon and find the real story in corporate filings. And let me tell you, ATI Incorporated's latest report contains more juicy details than a season finale. Today we are diving deep into ATI Incorporated's 2025 annual report, looking at how they performed, what they're worried about, and where they're headed. It might sound dry, but believe me, there are some serious implications for investors and even the future of innovation in materials science. Before we get into the nitty-gritty, if you appreciate these straightforward breakdowns of complex corporate documents, make sure you are subscribed. And if you want to dive even deeper and connect with other finance enthusiasts, our Discord community link is in the description below. ATI, for those who might not be familiar, is a real heavyweight in specialty materials and components with a huge chunk of their business, around 68% tied directly to the aerospace and defense industries. Think jet engines and airframes, that is where a lot of their money is made. They also play a significant role in specialty energy markets like nuclear and renewable energy, and serve other sectors including industrial, electronics, and medical. Scroller Business ATI produces specialty materials highly differentiated by our materials science expertise and advanced process technologies. Scroll, they split their operations into two main segments, high performance materials and components, or HPMC, and Advanced Alloys and Solutions, or AAS. HPMC is all about those high-tech materials, nickel-based alloys, titanium, and superalloys, often used in jet engines where extreme conditions are the norm. AAS, on the other hand, focuses on flat-rolled products like plates and strips. Also for demanding applications in industries like energy and aerospace, Scroll Sales fiscal year 2025 sales increased $225.3 million to $4.6 billion compared to fiscal year 2024, primarily due to increased demand for commercial jet engine products and defense applications. Scroll now, let's talk numbers. For the fiscal year ending in December 2025, ATI saw its sales jump by about 5%, reaching a total of $4.6 billion. This is actually their highest sales figure since 2012, which is a pretty significant milestone. What is driving this growth? Well, as you might expect, the aerospace and defense sectors are leading the charge, with sales to these markets climbing by a solid 14%. This strong performance in what we can call their core markets helped boost their overall operating income by 5% and their net income by 10%. Even more telling, their adjusted EBITDA, a measure of their operational profitability before certain expenses, saw an impressive 18% increase, reaching $859.3 million. This means their operations are becoming more profitable, with profit as a percentage of sales improving too. This signals that they are managing costs effectively while sales are climbing, a good sign for any business. However, it is not all sunshine and roses. They did mention their managed working capital as a percentage of sales increased slightly. This means they are holding a bit more inventory or have more money tied up in accounts receivable relative to their sales, while they attribute this to things like timing of payments and increased sales. Keeping a close eye on this metric is important to ensure it does not become a drag on their cash flow. Scroll risk factors cyclical demand for products. Scroll RTI is keenly aware of the risks they face, and they lay them out pretty clearly. A major one is the cyclical nature of the industries they serve, especially commercial aerospace. When the economy slows down or if airlines face challenges, it directly hits demand for their products. They also highlight the risk associated with key customers, meaning if a big name like Boeing or GE Aerospace were to significantly reduce their orders, it would have a material impact on ATI. Their reliance on the commercial aerospace industry is a double-edged sword. While it is currently driving growth, any downturn in air travel or aircraft manufacturing directly impacts their bottom line. They're essentially betting heavily on the continued expansion of air travel and the development of new aircraft and engines. Then there are the risks tied to their raw materials. They rely on suppliers for critical elements like nickel, titanium, and zirconium, some of which come from politically or economically unstable regions. Price fluctuations and supply disruptions are a constant concern, and they do their best to manage this through contracts and hedging, but it's a delicate balancing act. Scroll report of independent registered public accounting firm Goodwill Impairment Assessment Scroll. Let's quickly look at their financial statements. The independent auditors, Ernst & Young, gave them a clean bill of health on their financial statements. However, they did flag the goodwill impairment assessment as a critical audit matter. This means that while they found everything in order this time, the process of valuing goodwill is complex and subjective, involving many assumptions about future performance. It is important to remember that goodwill is essentially the premium paid for an acquired company above its fair market value, and if that acquired business fails to perform as expected, the goodwill can be written down, which impacts profits. In RTI's case, they have $225 million in goodwill related to their high-performance materials and components segment, and thankfully, their assessment showed that the fair value of these reporting units exceeded their carrying value, meaning no impairment was needed for this period. ATI Inc. and subsidiaries consolidated statements of operations. Sales $4,587.4 scroll. Looking at the income statement, sales were $4.6 billion in 2025. Up from $4.4 billion in 2024, that's a solid increase. ATI Inc. and subsidiaries consolidated statements of operations, gross profit $1,007.0 scroll gross profit, which is what is left after accounting for the direct costs of making their products, also grew to over $1 billion. This means they are not only selling more, but also making more profit on each sale. A very positive trend, ATI Inc. And subsidiaries consolidated statements of operations operating income $640.9 scroll, and their operating income, reflecting profits from their core business operations, also saw a healthy rise. ATI Inc. and subsidiaries consolidated balance sheets, cash and cash equivalents, $416.7 scroll. On the balance sheet side, cash and cash equivalents stood at $416.7 million at the end of 2025. While this is a decrease from the $721.2 million at the end of 2024. The company emphasizes that they have plenty of liquidity, including unused credit lines, to meet their financial obligations. ATI Inc. and subsidiaries consolidated statements of cash flows. Cash provided by operating activities $614.3. Scroll their cash flow from operations was particularly strong, coming in at over $614 million in 2025, a significant jump from 2024. This shows their business is generating a healthy amount of cash to fund its operations and investments, ATI Inc. And subsidiaries consolidated statements of operations restructuring credits charges $1.9 scroll. Interestingly, in 2025, they actually reported a credit of $1.9 million related to restructuring, essentially reversing some earlier provisions. This is a good sign, suggesting that previous restructuring efforts have been finalized and perhaps even over-reserved. Scroll note 16. Stockholders' equity common stock, par value $0.10 authorized. 5,000,000,000 shares, issued 142871688 shares at the 28th of December 2025 and 142871688 shares at the 29th of December 2024, outstanding 135934852 shares at the 28th of December 2025 and 141,387,049 shares at the 29th of December 2024. Scroll looking at the equity section. ATI bought back a significant amount of their own stock in 2025, spending about $470 million to repurchase 6.4 million shares. This is often seen as a way to return value to shareholders and can signal management's confidence in the company's future. They still have about $120 million left on their current repurchase authorization. So, what is the big picture here? ATI Incorporated seems to be on a solid growth trajectory, largely driven by the strong aerospace and defense markets. Their profitability is improving and they are generating substantial cash flow, which they are using to buy back stock and pay down debt. The risks they highlight are real, particularly the cyclicality of their key markets and their reliance on specific customers and raw material suppliers. However, the growth in their core business seems to be outpacing some of these concerns for now. To sum it up, ATI is showing strength in its primary markets, translating that strength into better financial results. They are managing their debt and returning capital to shareholders, which are generally positive signals. The key for them will be navigating the inherent cyclicality of their industries and managing their supply chain risks effectively. Alright, that is our deep dive into ATI Incorporated's 2025 annual report. What are your thoughts on these numbers and the company's direction? Let us know in the comments below. If you found this analysis helpful, please hit that like button. And remember to subscribe for more breakdowns like this. Don't forget to join our Discord community using the link in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next video.